Hi everyone, welcome to another edition, #AskRobco. Happy Wednesday afternoon here with James Wild. As usual, few technical problems today. Seems like our webcam is down. So we are going pure audio this week. See if we can fix that or see if we can do something live on the show. How have you been, James? All good?
Yeah, really good. Thanks, Rob. Been out and about for inspections, enjoying the sunny weather.
Brilliant. Yeah, weather's been great. That was one of my big predictions of 3 weeks ago, and it's still going strong, although rain is predicted in the next few days. So let's hope that changes. And the Euros, just going back on the closing comment last week, you told us that England had never won an opener in the Euros and hadn't won an opener in Euros and World Cups in the preceding 6 tournaments, to which I confidently said that was about to change.
Yeah, excellent prediction, Rob, and good game. And I think we've got next game Friday evening, so Euro fever starting to hit home.
Yeah, well, Scotland on Friday, I believe, isn't it? Is that right? Scotland?
Yeah. So domestic.
Yeah. Right, let's go straight into the numbers. I imagine that, let's see if people can get the handouts. I think the handouts are still working, so that's good news. So if you click on handout 1, we've got the latest sales figures for this week and the latest graph and charts. Anyone that's listening on audio can request that from us and we'll get it over to them. So headline data this week. Week 23 of 2021. We have new instructions 371, very healthy. It's been strong throughout the last 4 weeks. 397 last week, but very healthy, very strong, very consistent, reasonably good flow of volume. There could be more. The demand is that there needs to be more stock, but those levels of stock are still pretty good. Moving on to under offers and solds, that's where we've seen a big increase in the last few weeks, and dramatic, would I say, in the sense of you can clearly see the sales numbers have breached 300. If I'm not mistaken, first time this year, James, so you have to confirm that for me. And maybe we had a 1 week, possibly, but I think it's first time this year. And that sales have doubled in the last few weeks, which is really what I would have expected. And the only thing I'd say is I wasn't quite sure why it didn't happen a few weeks ago, but now we're in a really strong sales position as stamp duty window for the majority of properties closes 14 days to go for that June the 30th deadline. And really, there's going to be a ramp up of getting all those sold properties through in time. So very, very clear indicator there, James.
Yes, so we've got this week a record number of sales for this year, 301. We've got for the past week. Like I said, first time this year we've hit the 300 mark, building on the back of a high volume week last week in terms of sales. The current peak of the year, as we mentioned this week, matches the Q4 2020, some of those weeks of December where we saw extremely high sales volumes, closing off the year very strongly. Again, just looking through the statistics for this week, very, very low fall through rates this week, just 38. However, we are approaching quite a critical point for a lot of deals. Possibly more of the nationwide national deals rather than those London-based deals. But those savings will be slightly diminished after the 30th of June with the stepping down of the stamp duty holiday. The first £500,000 currently stamp duty free. That is being diminished to the first £250,000 after 30th of June, which will run until the end of September 2021.
So James, tell me, what are thoughts on what's going to happen over the coming weeks. So 30th of June kicks in. So we expect all the properties to go through this month, and that's why I suppose 9th of June figures were a week behind in that sense. So it's normal that everyone is going to try and get those deals through. So this is expected. Talk to me what happens the week or two after the stamp duty window closes for the majority of properties. Yeah. What are we expecting in terms of the sold numbers?
Well, I mean, it's been a busy few weeks, a few months even really for us valuers, and I know it's going to be a very busy few weeks for conveyancers as well. In terms of that stamp duty threshold being diminished at the end of the month, I think that the government's initial plan was to sort of fit everything in with the full unlocking of the country to possibly create some impetus in the market for any loss of the stamp duty savings. That has obviously now been pushed back slightly, the sort of Freedom Day, some people have been sort of coining that term. So after June the 30th, I think hopefully that if the vaccine rollout numbers continue at their current levels, that will, and the variants of COVID hopefully are sort of stay at their current levels or continue to be subdued. Hopefully the impetus from the unlocking of the economy, social distancing, hopefully that could create some more impetus in the market and maybe build on the momentum which we've seen over the last 12-month period.
Yeah. And also thinking about, I've been speaking to a lot of conveyancers and agents this week, and their feedback is conveyancers now are not managing new deals, new business, so that they can focus on getting everything over the line. And I suppose we're seeing that from a valuation perspective as well. So the supply chain is under pressure now in all sense. And I imagine that there's going to be a drifting of timelines for transactions in terms of the properties getting agreed now. So a very high level of, or good level of under offers. And if they're getting agreed and going to conveyancing, the first thing you would do is instruct that nothing can be done because the conveyancers are getting all the deals completed by the end of this month. For the other work, that will create delays, and also the volume with valuations. I know the timelines for most of the national firms at the moment is well into the back end of July. So I just think that there's going to be a lot of pressure from, I suppose, mortgage applications, lending, conveyancing, and valuation, where everything's just going to get pushed out now.
Yes, possibly. I mean, we've been working under immensely tight timescales for the last few months now, and obviously turning around valuations as quickly as we possibly can. Like I said before, as the economy starts to reopen in the next month or two, this will obviously, I think, trigger a back to work, back to the office from people, because like we've commented over the last 12 months, there's been such delays in local authority searches and also Her Majesty's Land Registry searches and inputting of data there, which has obviously been a bit of a bottleneck for some of the conveyancers and has ultimately held up some deals. So hopefully there's a little bit of normality, and there's certain so that those blocks will be able to speed up deals, and the market maybe will be able to adapt to these slightly higher volumes of transactions if we continue to see strong momentum in the market.
Yeah, one to watch. Okay, what else have you got for us? We've got some more handouts, James. What have you got for us?
Yes, so if we turn to handout 2, there's obviously been some news in the last couple of days about the monthly cost of renting compared with buying a property with a 10% deposit. So if you're buying computers, you tend to hand out two. We've got a nice graph here just showing a bit of a timeline going back from 2013 to the current day. Period when it highlights at the end of a long period.
I think this one is
it's been cheaper to buy a home if you have a 10% deposit rather than to rent. So we've obviously sort of tipped the scales here. It's an interesting one, and how sort of in some regions the monthly cost of renting has reduced, mixed in with certain areas of the market being slightly high geared on their loans and mortgages they're taking out. They're being higher LTVs in terms of increasing their costs. 10% deposit is not the highest LTV which is out there at the moment. We've been commenting for the last 6 months on the government-backed 95% mortgages, which are now starting to be rolled out to the market, with a number of high street lenders on board with this and offering products to those which are eligible.
Yeah, I find this chart fascinating, James. I think that over the last 10 months or the last year, I think it's incredible that this dramatic switch and change from it being cheaper now to rent than it is to buy, and that is purely COVID driven, and the change in rents and behavior in that sense, because 1 year ago or January, February 2020, we were virtually at 10-year lows on affordability for buying, and now it's cheaper to rent, and we're talking about a 1-year change, and it's quite dramatic when you look at those numbers. And what I would say, there's got to be a bit of a caveat there, because there's a nuance into those rental figures and purchasing numbers, because obviously certain areas have seen rental demand and growth, whereas other areas have seen decline. So I think that's an important caveat to make people aware of, that hasn't applied everywhere. Not in every location have rents maybe declined, allowing it to be cheaper and so on.
Yes, I mean, in terms of there's only 4 regions as at the current data whereby it's still cheap to buy than to rent, and that's the North East, the North West, the Yorkshire and Humber, and also Scotland, which obviously the strong house price growth we've seen in the last 12 months, and added to that the cost of buying and owning a home, has really caused this shift. And I think it is a short-term switch from the rental prices and the actual cost of homes going up, which has caused a shift. And it could be in the next 6 to 12 months, we see rental prices creeping up. Certainly those rental prices in London, I think, will start to come back to their previous levels, as they've had quite a sharp drop in the last 12 months, which will probably continue and continue to build. I think there's some recovery. There's some which are certainly with the back to work initiatives that lots of companies are running. I think that's going to start to return to the norm in the next 6 months.
Excellent, good data. What else have you got, James?
Well, just in terms of analytical points of this data, buyers with only a 5% deposit, they face an even bigger uphill struggle with the costs of buying a house. And as the data shown here is with a 10% deposit, and it's whether you thought and how do you think the government-backed 95% mortgages will help to shape or maybe change the market at all?
Yeah, I think that's an interesting one. I think it's probably a tiny bit too early to say. We are expecting there to be good take-up and good demand for the product, which would really fuel the bottom end and middle end of the market. I just think it's just too early for us to really understand the true implications, although we're obviously believing across the country and nationwide is going to have a positive effect.
Yeah, and I think obviously there's a big, there's always been a big push, and people have always, that's one of their number one things, is to own their own home. And I think the 95% mortgage, from an affordability perspective, with the main sort of roadblock in acquiring your own home being the level of deposit required. So I think this facilitates more home ownership, which ultimately I think is a good thing for the UK.
Yeah, I think it will. I think it will turn out to be that, and I think we're going to have to track the numbers of how many people are using the product. Let's try and get some of that data as quickly as we can.
Yeah. I mean, just on the back of these statistics as well, it's positive news for those build-to-rent developers. We've seen a number of schemes sort of gaining planning permission and starting to come out the ground, both here in London, and there's been a number across the nation as well. We've got some in Bristol, some in the Midlands, and also in Manchester has been a popular hotspot for build-to-rent. It'd be interesting to see whereby there could be a generational shift from those aspirational property owners to those who are more happier to be longer term renters, and whether we see any shift in mindset and mentality.
Yeah, I think there's a very good chance of that. I think people are definitely thinking differently, and I think we're in a different era. That will be an interesting trend to follow as well.
Just in terms of scanning across the market in terms of news this week as well, there's been some builders merchants warnings to house builders and developers in terms of ordering their materials early to avoid any shortages. As we note, there's been a bit of a perfect storm recently in terms of raw material prices going up, a squeeze in their availability, increased house building, with the current builders merchants looking to hold less stock as a result of the prices going up. And it's just what impact that has on the market. Hopefully, house builders, we spoke a few weeks back about the shortfall in our new homes which we're constructing year on year. So hopefully the builders merchants are able to facilitate getting materials directly to the large national UK house builders, and that doesn't cause any further delays in terms of the delivery of new homes, which are, especially here in the capital, desperately needed.
Yeah, I think what I'm seeing in the valuations we're doing is for the individual developer or end user product. What we're seeing is cost overruns on all of those. And obviously once you're in, and so there's no turning back. And I just think that the budgets and the pricing and the expectations that would have been put in are creating mismanagement of expectations at the end, and thus people are running over budget now. So maybe people believe they were all in at a certain price, and that's overrunning by 50, 100, 200,000, depending on what the product or project is. And then maybe when it's going for valuation, because the costs and the increment is so great, maybe they're not getting that money back, but they expected to in the first place. All of the projects that I'm seeing at the moment, especially standalone individual end user stuff, I'm seeing cost overruns in all projects.
Yes, that's it. And over the last 12 months as well, just from visiting a lot of new build schemes, new build sites in the last 12 months, in terms of the delivery of new homes with the stamp duty savings over the last 12 months or so now, a lot of those homes that are available now for buyers to complete on have actually sold by the developer, which obviously become slightly more affordable, given the potential stamp duty savings as well. So in terms of available stock, I think that developers have struggled to actually get things to the practical completion mark in order to facilitate buyers to transact on these new homes. And they've obviously got a large pipeline coming out of the ground in the next 12 months to make up for some of the shortfall of delivery numbers in the last 12 months as well.
Yeah, agreed. What else have we got this week to close out, James? Anything else?
That's it from me this week.
Brilliant. Thanks for the update. Thank everyone for listening and watching. Sorry about technical problems this week. If you didn't get any of the information, please let me know. Follow us on all the platforms, YouTube, LinkedIn, and all the other platforms, Instagram, etc. Keep asking questions, keep contacting us, and we'll keep updating you every week what's going on the ground, what's going on in the market, giving you the intel and data to help you make good property lending risk sales decisions. Have a great week. Enjoy the football. Enjoy the weather. Hopefully the rain won't come, but I believe it is. And we'll see you next week at the same time, same place. Thanks, James.
Thanks very much, everyone.